The bear market is one of the best times to make money because if you load up on a lot of assets for cheap, then you can sell it for a neat profit. When it's a bull market in a couple of years down the line, right? And a lot of people are doing that. Bitcoin addresses that are holding at least one Bitcoin is close to a million, right? And if you think about it, there's just 21 million Bitcoins, almost 4 million lost. And there are at least 1 million people today who are holding a Bitcoin, and that's going to be insane, right? They're going to make insane amounts of money. But Bitcoin today is at about $17,000, right? And it's not easy for all of us to probably go out there and buy one Bitcoin. Now, what if I told you that you could buy an entire Bitcoin just 20% of the price today? You don't really need to have 17,000 today. You could just buy it at 20% of the price, which is roughly about 3,400, right? $3,400. Now, how do you do that? There's an interesting concept called under collateralized loans, right? And what exactly is an under collateralized loans? Well, an under collateralized loans is that you put up something as a collateral. In this case, the 3,400 that you're putting in is the collateral, right? And this collateral is sufficient for you to buy something that is worth more than that, which is a $17,000 worth of full Bitcoin, right? And is there somebody doing that? Well, yes. There's a company called Paxo Finance. I met them in one of the ETH India events recently, and I was talking to the founder, and their concept seemed pretty interesting. So I thought I'll make a video about this and talk about it. Now, what exactly is Paxo Finance doing? Well, Paxo Finance is essentially helping you do this, this whole process that I just told you, which is to invest in crypto with just 20% of your capital, right? And it is an amazing way because this is like your margin trading, but but perpetual, right? And that's why they're calling it perpetual loans, right? And it's non-custodial, right? Unlike FTX or someone else, nobody would run away with your money. So that's pretty interesting, right? Now these are some of the interesting things that I found about them, and I went onto their website. You can both borrow and lend. For instance, if you're going to borrow, then you can see here that as of today you have like three assets: wrapped Matic, wrapped ETH, and wrapped Bitcoin, right? And an interest rate of about 5%, 5.1%, and you can borrow up to 5x. How is this beneficial, right? Let me show that to you with an example. Now, the timing isn't couldn't be any better, right? That's great for them, right? I'll just come to the example in a minute. These guys are completely decentralized, so I feel that was like really good about them. And you can lend or borrow, right? And one of the best strategies to make money is to borrow in the bear market and probably lend in the bull market, because you know that in the bull market you'll get higher interest, assets are priced higher, and you don't have the downside. You don't have the downside risk. In the bear market, you're borrowing for an asset that is worth like 70%, 80% down from its all-time high. You're paying a very low interest because the asset price itself is low, and you tend to benefit from the upside of this asset going up. So the whole assumption here hinges on the fact that Bitcoin will rise up, right? That's something that you need to be very clear about. Let me show you an optimistic case, right? How do you make money? Well, imagine this, right? This actually happened with a friend of mine, so I'm just like giving you a I was excited looking at this because I could so relate to it, because somebody close to me actually experienced did something like this. So December of 2018, imagine you bought one Bitcoin at $3,500, right? Let's say Paxo Finance existed back then. You bought one Bitcoin at $3,500, but you didn't need 3,500. You just had to put up 20% of the capital, which is $700, right? So with $700, you bought a full Bitcoin on December 2018, right? Let's look at the chart. December 2018 is somewhere here, right? That's pretty much like this whole zone here is how our bear market is going right now, and the assumption is that it will go back to a bull market like this maybe in 2 years. So imagine you bought it here at about 3,500, right? And in January of 2021, Bitcoin goes up to 40,000 dollars, and you decide to sell, right? So somewhere here, it's not even the peak, right? It goes up to $40,000, and you decided to sell. For the 2 years at an interest rate of about 5% or a little more than 5%, you paid close to $280 as interest. So 700 plus a 280. So you, for a nearly $1,000 investment, you exited with a full Bitcoin at $40,000, right? That's like an ROI of 3,900% or 39x your money. Right? That's insane, right? And this is on the whole assumption that leverage can, great exponentially make money or exponentially destroy your money. And here the assumption that we're assuming is that if Bitcoin does go up again in 2024, right, like what we saw here, compared to the 2017 2018 bear markets, to Bitcoin prices rising up in 2020 2021, if that cycle repeats, then this is a great strategy, and this leverage here, they can really help you multiply. It has a multiplier effect on your strategy, right? Just 35x to 40, 35,000 to 40,000 would have been, had you paid full price, right? You would have actually been doing, I don't know, maybe 8x, right? Not more than that. But because you're using an under collateralized protocol, you can do something like 39x if all things go well. Right? Broadly, I see two risks, right? One is the liquidation risk due to extreme price fluctuations. Although this is a decentralized protocol, there is always a risk that extreme events, which has happened, right? Which has happened continuously. It has happened to Terra Luna, it's happened to FTX, it has happened to so many players. When there is a bank run, when there is a very very stressful black swan event, anything could happen. And when that happens, I think even this protocol could fail. That's a big risk that I foresee. In fact, I was telling this to the founder that unless you put withdrawal limits on your on the Paxo Finance for the people who are lending into the pool, you might experience this. And it takes just 1 day, 4 hours, 6 hours to just crash the entire protocol, right? I was telling him this as one of the risks, and you getting the timing wrong. Right? This is a risk for you, right? If you get the timing wrong now, let's say you go and actually borrow when the price was high. Let's say you borrowed when Bitcoin was at $65,000, right? You could not have done something worse than that. So this works only when you get the timing right. When it is the bear market, typically I don't get into trading because it's too short term to make any decisions. And especially with margin trading, you could wherever you're taking leverage, you could really blow it, right? Here, I feel that because it's for the long term, you're able to absorb the market conditions. You're able to make better decisions. You have more understanding. The market is a little less irrational in the long run compared to in the short run. So I feel leverage for something like this could actually be a great money making machine. And one of these protocols that's doing that is Paxo Finance. Hope you like this analysis. Hope you like this example. Do like and subscribe to the channel. If you are interested, join our Telegram group. You can also check out our Patreon link for the closed community that we have, where you will find amazing content on crypto investing. Stay tuned for more such amazing videos. Welcome to the Wave Crypto Club.